Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Yes, I'm sure most of you heard that Rivian is going public. In fact, the IPO is supposedly going to give Rivian a market cap of $80 billion. I just wanted to discuss whether or not this was absurd and what it could possibly mean for some of the other EV companies. Okay, firstly, is $80 billion an absolutely insane valuation for a car company that has no history of any sales, no proven track record of mass production and distribution of vehicles, and many other missing elements you might expect, or at least resemble closer to some of the progress Tesla had made when it was at an $80 billion valuation? Rivian has managed to create a niche for themselves in the EV market as more of an outdoors lifestyle kind of electric vehicle, which is something, although the R1T will have to compete with the Cybertruck. But like I said, Rivian have niched themselves, so perhaps they will have a market. But let's say Rivian can make $10,000 profit per vehicle they sell, and I believe they're attempting to make another $5,000 or so per vehicle from software too, like FSD. This sounds rather like the influence of Amazon, similar to how Amazon thought they were important enough that they could start a smartphone company with its very own operating system. This seems to very much rhyme with that scenario. Here we are again with an Amazon-related product, thinking that they can manage FSD all by themselves and only attempting level 4 at that, not even going to bother with level 5, likely a massive mistake. I mean, Rivian is tiny, don't forget. Yes, Rivian may be one of the largest non-Chinese, non-Tesla EV companies, but they don't make any sales. Anyway, $15,000 or so profit per vehicle, and that's gross profit. So let's say $5,000 net profit per vehicle, with a PE ratio of 30, then at an $80 billion valuation, Rivian needs to sell just over 500,000 vehicles a year. The thing is, 500,000 vehicles of high-end luxury trucks and SUVs, that's a lot to sell. Tesla was selling just over 100,000 Model S's and X's a year at its peak, and with no other competition. Remember, Rivian are doing all this with one major competitor already taking up the market. Tesla had no competition when they were at this stage. But Rivian have Amazon, and they will supply all of Amazon's vans. Well, Amazon may not be giving quite as large a net profit per vehicle as the sales of the truck or SUV, and Amazon only ordered 100,000 vans. It's not going to be the make or break of the company. I don't believe Rivian have spoken much about their missions after these vehicles, and how they'll get to a mass market vehicle somehow, which will not at all be easy and take a very long time. Time is not on an EV company's side, as Tesla are becoming so big and the Chinese EVs are evolving quickly. Rivian are also leaving everything very late, in my opinion. We know the race to the EV market share is predominantly down to battery supply. It sounds like Rivian will be partnering up with Samsung for batteries. They haven't even started building their own battery factory yet. It takes a long time to build up battery factories. We see now the legacy autos desperately partnering up with battery suppliers. Well, at this rate, Rivian will struggle to deliver Amazon's vans before 2025. Now, BYD, which actually is the company that resembles Tesla the closest, not Rivian, and BYD have actually sold hundreds of thousands of EVs in the past too. They even have their own in-house battery. BYD has a similar valuation to this Rivian IPO, despite being that much further ahead than Rivian, with proprietary proven technologies compared to Rivian, with no proven technology. In fact, NIO too, a pure electric car company that is established and has sold well over 100,000 EVs, yet only has a valuation of $55 billion. But the market is looking to Lucid's stock price as guidance, and perhaps even Nikola. We're likely dealing with FOMO investors here. They missed out on Tesla, they aren't going to miss out again. That is not the right mentality for investing, not to mention likely some sort of pump and dump scheme might go on here too. I guarantee on the day of the IPO the stock price crashes. I might actually try and get some put options in if I can even. The thing is, if Rivian can score a valuation of $80 billion, or even $40 or $50 billion for that matter, with the minimal level of models on offer, in an upmarket niche that few people can afford, no battery factory or secured battery supply, etc., well then, this is what a bubble looks like. I think Rivian are likely just trying it on and pushing their luck, but it still may very well end up being an IPO above $50 billion. On the other hand, Lucid is currently trading around $40 billion already. Which is a superior brand, Rivian or Lucid? Which one will the market decide is more valuable? Neither of them have anything concrete to value the companies on, merely speculation. Seriously, nothing else like sales. it will be all about marketing hyperbole. Oh, similar to most cryptocurrencies, I suppose, or non-fungible assets even. I think this was one of the signs of the end of a civilization, people spending money on items that carry absolutely no intrinsic value. But if these companies like Lucid and Rivian can score higher valuations than legacy autos without even selling one car to one customer, well, if I was a legacy auto company, that would make me sit up and think, hang on a second here, what is going on? These other companies haven't even sold one EV yet. Not only that, the ones that they are making are incredibly niche and not for the mass market. I don't understand. This should be a huge wake-up call. If I was a legacy auto, I would have done something similar to what Volvo have done. Volvo started Polestar, which has been making electric cars. In fact, they're already selling electric cars. Except for some reason, I don't think Polestar has close to a market cap as Lucid does. Polestar is also looking for a SPAC deal and going to be at a valuation of only $20 billion. Really? Why is that? Shouldn't we trust a company that's been making cars for decades and that's sold thousands of EVs already over a new startup? Why should it have such a higher valuation? This is actually very strange. Why do these new EV startups think they can get away with such an arrogant stock price? Well, perhaps it's because these new EV entrants are entering a different industry from legacy autos. They're able to enter a car industry without using car dealerships and don't have to navigate around all the expensive legacy auto systems. These companies are gathering these valuations because people seem to think it's just another Tesla. Just copy and paste everything Tesla did, and this company will also go on its way to a $1 trillion valuation. It's EVs. EVs are a huge industry. Anyone involved in it will make a fortune. Well, I disagree. I don't believe we're in the age of an EV. We're only in the age of Tesla. And until any other auto manufacturer can even make a basic EV with sufficient range at the same price point as Tesla and make an actual net profit, then in my opinion, all other EVs really are moot and are simply burning capital until there'll be none left to burn. There is no evidence of the alternative yet. These capital burning companies are likely simply just hoping on battery prices dwindling, perhaps coming down in price another 50% over the next few years. And although some batteries may, it doesn't just happen. It requires heavy research and development, R&D that Tesla is doing, that can't be close to matched by any other company in the world. All the other companies can do is simply sit back and watch, then reverse engineer what Tesla has done as best as possible, likely resulting in too little, too late. And who's to say that the chosen battery technology that everyone else seems to be choosing, with some form of combination of nickel, manganese, cobalt and aluminium, won't actually increase in cost over time, rather than reduce in cost, due to these elements becoming more scarce and more in demand, and thus more expensive. I also see potential rivalry issues with Bezos, refusing to adapt to the Tesla FSD and supercharger network. If Rivian is not compatible with that, then they have a very limited future. Aside from Amazon vans, of course, which will not be self-driven, which is going to end up being a disadvantage to Amazon. This Bezos and Musk rivalry will be interesting to see how it progresses too. The fact Bezos is somewhat competing in Tesla's field, I would say the discrepancy of the products will end up something similar to Blue Origin versus SpaceX. So can Rivian really sell 500,000 vehicles a year with $5,000 net profit? Well, maybe. And then they'll be worth $80 billion. But only then, and not before then. Rivian's valuation is ridiculous, as is Lucid's. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.